Hello everyone, this is Bella talking and welcome to my next video. Today we're going to talk a little bit about the Albrecht's method of counting K-lines, which is part of my price behavior teaching series because a lot of people who read ABU don't know how to count K-lines, and counting K-lines is the basic tool that goes through all of ABU's books. And if you can't count K-lines, you're going to have a really hard time reading ABU's books, and if you're reading ABU's books or interested in reading this video in the future, you can watch it, and if you're not interested in ABU's books and you want to watch my video course, you can skip this one. In the next video, I'm going to update my tutorial on trading ranges, but before I do that, I want to emphasize that counting K-lines is just a basic chart reader and it's not some sort of trading trick, and it's not some mysterious way that you can learn how to trade straight away and make money just like trend lines. It's very simple to define trend lines, and you can draw them any way you want as long as you're in the uptrend and you connect the lows of the bands that are the trend lines, and you can draw an infinite number of trend lines on a chart. Look what I've drawn here and what I haven't drawn, but it doesn't mean that you have to trade every trend line, and it doesn't mean that every trend line is useful. And the same goes for counting K-lines. You can count any way you want, but it doesn't mean that you have to count whenever you want. Whether it's counting K-lines or you're drawing trend lines, or you're drawing patterns on a chart, or you're using technical indicators, these are the fundamentals of trading. Let me take an example. For example, if a person learns to play basketball and practices for a period of time to master the skills of dribbling and shooting, then they directly ask you to play against the expert basketball player. How much chance can you win? In fact, it can be said that you can't win at all, because you learn the basic skills. But the people who are really good at it are really good at it, and it's not that if you learn the basics you're going to beat you, and it's the same in trading and in the investment market. It's people versus people. Your buy order has to be sold by someone else, and what you buy is what they're selling, and your sell order has to be bought by someone else, so there has to be a correspondence for you to make money on a trade. People or groups of people in money-losing institutions and skilled traders who have deep pockets and strong technical analysis skills and have mastered the ability to control their own emotions, so they beat most market participants. Put other people's money in your own pocket. You have to be as smart as they are if you want to make money in the trading market. Learn to trade and learn to control your emotions so that you can beat the dominant players or the strong players, or the only way that you can join them and make money out of the pockets of the weak players. The dominant players, the strong players, these are the strong players in the market. What are the weak players? It refers to a participant who is not skilled in graph reading, who is not good at technical analysis, who is unable to control his emotions, and who often goes with the flow and makes decisions based on his emotions. No matter how much money he has, as long as he has these points, he is a weak player in the market. He takes the money from the weak players and puts it into his own pocket. This is the objective law of market operation. In a zero-sum game, there should be no daydream that everyone can make money. Some rookies or some old leaks are invested for a long time also do not learn leaks. He buys a stock to take a look at a stock or take a look at a currency. He thinks it is very promising. We buy together to believe in the product together to push up the price. That all the people can make money, this idea is realistic? It's unrealistic if you think about it. It's a zero-sum game and you can't all make money. You're going to lose money when you're buying together, and who's going to lose money, and how are you going to make sure that you're not going to be one of the last people in the market? And you're going to learn technical analysis, and you're going to analyze the market objectively and logically, and you're not going to participate in the investment market based on your emotions and your beliefs. So before you start trading and investing, it's important to look at whether you have the characteristics of a strong player or vice versa. You have the weaknesses of a weak player. If you find yourself in the category of weak players, you should not trade first. You should learn to improve your technical analysis ability, improve your trading system, and exercise control of your emotions. When I first entered the investment market, like most people, I entered the market in the bull market. I rode the bull market without knowing anything, and made a lot of money, but I lost money in the bear market. Then I found that I had no advantage in the investment game. So I started learning to build my strengths and find my strengths. The direction I choose is to learn technical analysis. In the learning stage, I only review and summarize, but do not do any trading, because I know that my knowledge system is not perfect. It is meaningless to rush to operate and rush to operate. I will practice for a period of time to find out where I still have problems, and then continue to look for relevant materials to study and improve, and finally summarize the trading system suitable for my own. Many novices always just learn a knowledge point, just learn an index, just learn a system to rush to operate. I think this is not good. Again, trading, in order to make money, you have to implement a complete system of advantages, and every knowledge you learn and every tool you learn is just part of the system, and it's pretty obvious who has advantages and who has disadvantages when you use one of the tools of the system versus someone who uses the complete system to trade. Let's look at the definition of the number K line. What are the high points? 1, 2, 3, 4. What's low? 1, 2, 3, 4. In today's simple sharing, I only teach you how to count K lines, but not how to operate with K lines. Because ABU has taught you how to use this tool in 4 whole books, I cannot explain it to you in dozens of minutes of videos. If you want to learn how to use the number of K line to trade, suggest yourself to read seriously. On the left is the definition of the number of translations that I downloaded in an ebook a long time ago, and on the right is the translation that I bought in a paper book, and you can look at it briefly, and I'm just going to read one if you're interested, and stop reading for yourself. What does it mean to read high first? High 1 is when you're in a bull flag or near the bottom of the trading band. The high point is K higher than the high point of the previous K wire line. This is height 1. Height 1 comes first, so if you have a K line with a lower peak, and then what happens after this adjustment is that the next K line with a higher peak than the previous K line is a K line with a higher peak, is a K line with a higher peak, is a K line with a third and a fourth line, is a K line with a high of 3 and a high of 4. And if we look at this text alone, it's really hard to understand the definition of text, but it's actually very simple when you combine it with the diagram. The paper book is the one that you buy, and the book is the one that you annotate, and this is the glossary, and there's no diagram in the glossary, so it's really hard to understand the text. But the ebook that you downloaded before, it has a diagram added at the back, so it's easier to understand. These 2 cases are actually very simple and easy to understand, but a lot of the examples in the book are very abstract, and they're variations of forms that make it a little bit more complicated to understand. And we're going to talk about that in a second, because we're going to look at this high 1 high 2 example, and I think a lot of people can figure out how to count this. Starting with the down band of K15 or the down leg, we see that the highs of K15 go down in sequence until the K line marked by the red arrow is the first K line where the high is higher than the previous K line, and the K line marked by the red arrow is higher than the previous K line, and you can see that clearly, so that's high 1 high 2 occurs at this time, contour 2 after the appearance of high 2 the peak drops. This is the continuation of the band. K line 16 is a long negative line. K line 16. After a long positive line, but this positive line does not exceed the high point of K line 16, so it still cannot be counted. But behind this positive line, there is a small negative line, but this negative line is actually higher than the positive line in front of it. It's not very clear here, but it's actually 1 point above, so that's the second high point above the previous high point of the K line. It's a high school sophomore, and that makes sense to you? High 1, high 2, and what if after sophomore year, the high goes down and there's high 3, high 4, and you just keep counting down, and it's very easy. Look again at the low 1 2 example. In the case of 2, senior band has an obvious fall, so understand is relatively simple. But the first and second to the novice for beginners accepted because it is not so good. How to understand basic is horizontal. If we look at K line 6 to K line 9, it's also a sharp decline, so what happens at K line is that the momentum of the decline stops and the adjustment starts. Although the correction is lateral, it is also a correction after the K line 9. The small package of crosshays is a pause in the downward momentum of the K line. The low of the K line 10 has fallen below the low of the little crosshays. It is a break down after a correction from the rise of the K line 9, that is the low 1 after the low 1 after. The K line 10 its low point raises the 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 low point, and then it goes down a few more times. K line 11 pulls in a negative line with a long upper line. Anyway, a K line behind K line 11 it breaks the actual low point of the K line again, so it's the second low point below the low point of the previous K line. Where do you count them? From line K9, because the price has been adjusted from line K9. 10 is the first break, low 1, and the negative line behind line K11 is the second breakdown, low 2. So these two examples are very simple and should make sense to you by now. On the left side of this chart, there's actually a high of 3. If we look at the pullback from the K line 1, the high of this long negative line is the first time the K line breaks forward from the K line high. Here's a high 1, here's a high 2, and then after a high 2 we have a high 3 because we're going to start counting again, and a high 3 is a wedge adjustment, and I'm not going to go into it because I'm just going to talk about how to count and not how to use it, so you want to know how to use it and read it yourself. Let's look at a few more examples from the book. Look at this chart. The first sentence of this chart forms a breakout pullback buying structure above the long inside K behind the K line 8, which is also a buy signal for the failure low 2. Let's first look at this failed low 2. Where did this low 2 come from? This inner positive line behind the K line 8 is this little positive line. Why is it the failed low 2? Where does the low 2 come from? This low 2 is counted from the rise of line K5. Why not count from line K2? These two rallies should be understood as two rallies, and this is going to be related to reading the chart, and I won't talk about it here. If you count from line 5, we see that line 6 is the low one of the rally pullback. The lows are all rising, but the low of line 6 is breaking through the low of the previous line. Line 6 is the low 1. What happens after the low 1 is the low rise, continues to count the later K line. K line 8 is a low 2. A low 2 form from K line 5. What does it mean that low 2 fails? We see that K line 8 is triggering the entry of low 2. But K line 8 after that it has an inner envelope of positive, and this inner envelope of positive, and it breaks at the top, meaning that the high point it continues to rise, or the low point it continues to rise. Then at this time, the signal of low 2 has failed. We need to find the breakthrough in the back. We continue to look at 4K wires, and then there is a high 2. Multi-structure. Where are these 4K wires? The K wire we just stopped on this K wire. So where did the sophomore come from? It starts from line 7 high point callback number we see from the beginning of the K line period callback number, then this that a pack of positive lineup breakthrough is a high admission. What follows is the entry of a sophomore in high school, which is the small positive line before K line 9. Above, the price breaks the high point of a K line for the second time. Did we read the definition in the book before? So we're going to go up one high 2 in a pullback like a long pullback, and we're going to go down one low 2 in a short pullback, and we're going to go down one low 2 at the top of the range, and we're going to go up one low 2 at the bottom of the range, and we're going to go up one high 2. Why is this at the top of the range, or is he going to go up 2? In fact, in Abu's book it's a little bit arbitrary to count the K lines, because we talked about it at the beginning. It's a tool. You can draw your trend line any way you want. You can count the K lines any way you want. It's just a tool. It reads the graph. What information? It's reading out the break of the price against the previous K line, and every break is meaningful. So even though it's a second break up at the top of this range, it also corresponds to a breakout pullback anyway. It has a corresponding meaning. So if someone asks us in the definition to count the low break at the top of the interval, how do we use this one? And we can't count the high break in the real world, so that's your experience. Or you should read the book. You can't say that. So let's look at the next case. It says here that K line 6 has a high 2 go long, and it's a little bit easier, right? The pullback from K line 4, this positive line, is the first upward break, and then the high goes down, and K line 6 is the second upward break from the high, and this should be clear to you. If you've watched so many courses, it's not that easy to talk about. It's very simple. So let's see here, is there also a low of 2? The pullback from this K line, this negative line, is the first break from the low, and then the first point rises the first point, the second break. This overlapping K line is exactly the same in Abramov's book, but in my trading system I'm going to divide up the cases, and I'm not going to do it here, because the overlapping K line represents the trading range, this overlapping long line pattern. I personally don't like to get involved unless it's at a very critical level, at a price level that's critical, in which case I might get involved even if it has a weak K line. Let's look at a low 2 case, and I don't need to say much more about it, you can count it because it's very simple. The uptrend correction from the K7 phase, the K line behind the 8 and the negative line behind the K line is a low 1, and the negative line behind the K line is like it broke down, it's a low 2. I don't need to talk about the simple callbacks that I think you all know, and it's really pretty standard and pretty simple. Let's do a slightly more complicated case where this K-line 5 can be viewed as a low 1 or a low 2. The K-line strand is this one, and it's easier to understand if you think of it as a low 1, but how you think of it as a low 2, this involves a variation. If you don't understand a variation, try to understand it in terms of small periods, like this K-line 5 we're talking about, this so-called high 2 low 2, or 3, 4, 3, for high 2, 3, for low 1, 2, 3, for its counting callbacks. What about the callbacks that start with K-line 4? K-line 4 is 1, K-line 4 is negative. So let's look at this positive line, which is a sharp rise in prices, which is the first correction, and then we have a negative line, which is a time, which is the end of a correction wave, and then we have a positive line. It's the second pullback. The second pullback movement has a downward breakout. It's a low 2, it's a variant of a low 2, and you can see what he's talking about if you try to understand it from the little cycle. And then let's go back to the K-line 6 is a low 2. So this is easier to count, because if we don't consider this variant, you go from K-line 4, not K-line 4, you start with this one, which is the lowest K-line, you start with the lowest K-line, and then this is the first down breakout. Let the low point raise the K-line 6 is the second down breakout very easily. Let's look at the first sentence in part 2, and it's this high school variant, and I realized when I was preparing the material that I didn't understand it either, but I compared it to the paper and I realized that maybe he had mistranslated it and he used the because, but the related word was wrong. So we're going to forget about it and we're going to count the low 2 because we're going to focus on how to count in this video. It's easy to go down too. If you start with the K-line 10 and you start counting the band pullback, this K-line is low 1, and then the first point goes up, and then you have another K-line that goes down and it's low 2. That's very easy to do, and then the K-line 14 goes down too. That's nice to count. How does it count from this point up? It's this two-stage rise. What about this K-line after 13 is down 1, and then this is down 2, and then the second low break is down 2, and we can look at it, it's the low after the first one, and it breaks down, and then the low keeps going up. And then this K-line is the second one. Why do we start counting from here? Because the market might be in a range, and even if it's not in a range, it might be in Abramov's book, because he's counting in a random way. And again, the K-line is a tool, and you shouldn't focus on exactly how to count 1, 2, 3, for you should focus on whether you're counting pullbacks or not counting numbers. If you look at the last K-line, low 2 of 16, this is also easy. If you start with the K-line, this is low 1. The first low break, and then the K-line 16 is followed by the second low break at the first point, which is a second one, and this is also very easy. Abramovich says in the book that if you have a bull market correction and you count 1, 2, 3, for high 12, that's a correction, and 2 high 3 is a leading, high 4 is a channel, and if the price doesn't follow the trend after high 4, that trend is probably broken. So how do you understand that? In fact, all the high school. If you look for yourself at the first high break, the second high break, the third high break, we look at the 15-minute chart, it's a high school pattern. What is it on the 5-minute chart? On the 5-minute graph, it's a 3-step fall, and in a bull system all 3-step pushes are basically called wedges, and it doesn't have to be able to draw that wedge. As long as it's a 3-step push, it's a phenomenon, and you get that? In the big cycle, the current cycle is 15 minutes a high year, 5 minutes a small cycle is a wedge. If you have a high 4 correction, it's a channel, and I'm not going to look for the usual high 2 correction, it's a 2-stage down correction, and it's very obvious on the small cycle. If you don't understand anything on the big period, just go to the little period and see if it's clear. Let's look at another example of a variant of this. What's a variant of this, for example? If you look at the 4-hour chart on the left, if you count from point A, and you count from the top down, you count down by 1, and you count down by 2, we see the K line. 1 is the K line of this arrow on the left, it's the first downward breakout, and then we see one long short K line after another, right? But you have to say that the second K line is the K line in the sky, and you can interpret it as low too. How can you interpret it? And we're watching the video on the 4 charts, and the high of the second K line is actually higher than the high of the first dollar, but it's probably a variation of the low too that's not obvious on the 4-hour chart. So let's go to the 1-hour chart, and the 1-hour chart on the right goes up from the bottom, and then we see an upward force, a short breakout blue arrow, an upward force, a red short breakout, and then another upward force, and then another short breakout. So if we count the K line, that's the pullback, that's the breakout. So if we count this down by 2, we find that the shorts are actually doing 2 breakouts, but on top of that you have to count the first glance, you only see it once, then it's a variant of the second. Can you understand? That is, if you read a book and you see a lot of arguments that you don't understand, then you go to the little cycle and you think about how the little cycle price moves, it's easy to understand. So this is an example where you can easily see 2 short breaks on a mini cycle, and I'm going to give you a little bit of a summary, because I'm not going to be able to go through all the cases in the book. There are just too many cases in the book, and I'm going to summarize a couple of things, and if you follow them, you'll see most of them. The first one is to count K lines, and most of the time you just keep counting, and that's certainly true, because that's what most of the K lines say. And the second one is that if there's an argument that you don't understand, you think about little cycles, and you think about little cycles, and you think about them. And the third one that I just thought I didn't write down is that if you can't count the numbers right, and you can't understand it, then maybe you're misreading the market, because what we're counting is a pullback. And if you don't understand what the market is doing, then you can't count the numbers right, and there's no way. You need to improve your overall graph reading ability to judge the right callbacks, to count the right K lines. K lines are just a very basic communication tool in AB's book, AB's system, and if you're interested in learning more about it, you might want to take a look at the book. AB's book has a very good interpretation of the microscopic movements of prices. It also means that he has a very high bar for you to read. If you don't have a basis for trading, don't watch it. I suggest you watch my last video and read some of my introductory books. If you look at the beginning of this video, you can see that there's a difference between ABU's number K line and my second break K line. My second break K line doesn't start at the band point. I also call the second breakout low 1 low 2 just because it's convenient for you to talk about it, and I hope you understand the difference. Okay, that's it for today. Let's continue our tutorial in the next video and start with the trading range. Thank you for watching. Please consider like, subscribe, and don't forget follow us to see upcoming video.